There we go. There's a little bit of audio. So today I am continuing to work on the breakout script that I started putting together yesterday. Last night I had a thought, and I decided that I know how I can make the breakout script. I was working on the breakout script yesterday, but TradeStation, in order to use it in a strategy or an algorithm, you have to um, you can only get into a position using the strategy, like automated trading. You can only do it on like pretty much the next bar. You can do it on this bar close or the next bar market, next bar limit, next bar stop, next bar open, I think, and then there's one more. But my intent was to be able to get into a position this bar at this level, because that's where you want to get. If you trade a breakout, you want to get out at the break, right? So what I was trying to put together for that strategy did not work. So I thought about it. I was like, hey, well, I could use some of the um, logic from the larger time frame, but actually get into positions. Use the smaller time frame to get into the positions, and that way, you've got on a larger time frame that candle may have broke out on minute one, but it goes on for another 10 minutes continuing to break up. But you don't, if you're using the breakout strategy or using the system the way it's set up, you're only going to be able to enter when that bar finally closes. So if you're on a 5-minute bar or 10-minute bar, it might have broke out on minute 2, but you not getting in until minute 10. So that's not what we want. So if we do it on a smaller time frame, then we can get in sooner on a tick or on 15-second time frame. So that's what I'm looking at today. I don't know if I'm going to be successful with it or not, but I'm going to just spend a few minutes going over that, and hopefully somebody gets something out of it. But let's see here if I can switch screens. Here we go. Alright, so we're going to open the coding environment. Alright, I don't even know what I want to look at today. I've got a radar screen going for some of the 1% gainers, and I don't even have any filters on it. So some of the 1% gainers that are going on for the day include the likes such as PALI, FOXO, ICCT, AVAV, MRN. So one of the things that I've started doing is I'm going to capture what's going on with the volume. What's going on with the volume with all these, and hopefully it's not too much. I'm really working this computer. I said, you know what? I could take it easy on the computer. I got a new computer. I'm so excited about it because I don't spend a lot of money, and so I got a new computer, and I said I could take it easy. I could baby it so it lasts a long time. But you know what? I'm gonna give it to it. You know what I'm saying? If the computer doesn't last, if it doesn't hold up like I thought it would, then I don't want to say it's garbage anyway, but it didn't do what I wanted to do anyway. So I'm gonna have fun with it. I'm gonna do what I get to do. All right. So the first thing I'm gonna do, just for the first part of the day, is I'm gonna put some of these stocks on the in this what I call like my volume watch. So I'm keeping track of what's going on with the volume of all of these, and that way I can go back later in the day and I can see what happened, see if the volume was responsible for pivots at certain areas. So that's the objective here. If it'll take anything, there we go. PLI, FOXO, and I'm just kind of going down the 1% gainer list that is provided by the TradeStation platform. So nothing special here. But let's see, that's the top row. The top row is filtered or sorted by percent. I'm going to do the next row filtered by volume. So we already have PLI again, FOXO again, and then we have a TRVN, and then we have the ICCT. So TRVN, MRIN, we got Roku, Next Gen, and one more from here, the SST. Okay, so those are the top ones there, and let's see, that's sorted by percent change, which is pretty much net percent change as well. So I'm just on the bottom, I'm just going to add Tesla, which I usually look at anyway, and I'll do TQQQ. That one should have a lot showing up. These should be filtered according to only taking transactions over like 30,000, because I'm not interested in all the transactions. I only want to see the transactions that are booking it. Alright, and how come I don't see my... There we go. Yeah, so transactions over 35,000. Alright, so Tesla, TQQQ, we'll do Microsoft, and then we'll do NVIDIA. Alright, so this is just getting me set up for the day. And already on FOXO, we got some big transactions happening there. So what's happening with FOXO? Oh, yep. Come in. Data disconnected from trade station. What are you talking about? What are you talking about? Feel like that was intentional. I don't want to see that. Alright, hang on while I adjust. Let's see what's going on here. That doesn't happen often. Alright, so back in the mix. Everything is waiting for data. I'll get out of there. FOXO is tanking. I'm not sure why my volume has jumped all over the screen. Scaling, 15, fixed movement, automatic. There we go. Alright. Based on ticks. Oh, and I did say I wanted to make one other change with my charts. I decided that this morning, so this is going through some type of consolidation or rotation, and it might just break to the downside. Like I said, I don't have the volume, so I don't know what's actually going on here. I bring the volume screen back over. FOXO hasn't put any. Well, I think that, and that's why we went to it. It did put in some larger orders, but now that the trade station disconnected, I don't have that data, so I don't know what it was. Excuse me. Alright, Next Gen put in some decent sized orders here. I imagine that's Next Gen. But look at it. Huge gap up, right? Well, I mean, from 20 to 30, that's $3 on 20. So zoom in here. I gotta see what's happening. Oh, well, it looks like low liquidity though. I mean, in the grand scheme of things, it might be higher volume than it's used to, but it's still not much liquidity. You have candles that look like this, candles that are so close to each other. What's the volume there? Like 22,000? Nah, that's not enough volume. That's not enough volume. What are you, man? Crazy or something? Alright, so now on my other desktop, yes, I have a lot of desktops. I've got several monitors. I've got a lot of desktops. So Day Trade Watch 1 CLRB is one that I was watching from yesterday, and I did a video about it. So here we had large order. I think we had large orders here, and then we had a high amount of ass orders here, high amount of ass orders here. At this breakout, it broke up. Here, obviously, it retraced, but it's still moving back away from that because that is a area with a lot of support, buyer support. So we're going to leave that as Day Trade 1. I'm going to continue to watch that. And along on this same watching screen that I have here is volume, 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 and then here I have bid and ask size. So trying to observe who is in the market. Buyers are in the market. Buyers are wanting to buy. If buyers are wanting to buy that much, then sellers are probably going to say, sure, we'll sell to you. And so that's probably going to get popped down just by looking at that. But who knows? I certainly don't know. I'm not an expert on this. All right, but I do want to add this bid and ask size. I want to add that to this chart as well. I said I wanted to take it away from the 15-second chart, or make that 15-second chart the tick chart. Now in the past I've had that this 15-second chart as the 15-second. I use this as the tick chart, and I was kind of trading the tick chart. And maybe that's why, but I found that I've been doing a lot more of my documentation on this chart just because it's a little bit larger, and as I'm looking at the volume, I can more easily put the info here. So I'll probably leave this as 15-second. I'll move this to the tick chart. 10 ticks, CLRB. Then on that one, 15-second, we're going to make that the bid and ask. Where's bid and ask? Bid and ask size. There we go. Okay, so I need to add that to all of them because I definitely want to capture that data, and I can certainly move this down just so it's out of the way. Okay, and then we're going to go to Day Trade Watch 2, NVOS, one of them that I've been making studies on, scripts on. Okay, and that one, I guess it failed in the after hours. 3, it went ahead and moved up, and then it failed at the end of the day. Okay, so I don't know if I'm gonna watch that one. I'm gonna change this watch one to the Foxo, and then again we're gonna add the simple, the bid and ask size, bam, and then I'm gonna change this one to 10 tick. All right. Now what you see here, this is just where the strategy has been applied. SA right here means strategy. Strategy optimization. Strategy automation. So that's what the SA stands for. The A in blue here, I believe, means that the strategy is set up to actually take orders, to actually run. Let's see, strategy. No strategy on there. Okay. I thought I had it set up different. Okay, so we're going to get back out of that. And on the 5-minute, I can take away the bid and the ask because it's useless. Alright, so 10 tick, that. I'm going to move this down. A lot of ask coming in there, so maybe reaching some. If it is also reaching demand, then it could certainly move up from this level, which is starting to do. And I say it's a lot of ask because you see this high amount of ask coming in here. Again, that means that there's a supply of shares that people are willing to sell, and if there are buyers, then buyers can buy that up. But we're still looking for large orders. I mean, like a large amount of orders. 10 o'clock, 10:08. There's a 66,000. So what I'm looking for is something different from what you're already seeing. You're already seeing 5,000, 27, 12, 7, 23, 10, 25, 10, 18. So all these look, I mean, within 5 and 20. So nothing's really standing out. But now when you find a 150 in here, you see that 66. That's starting to get significant. 82 is significant. So 1007. 1007, if you come back to this side, 1007 is right in here. That's where you get those large orders coming in. So those larger orders are saying, yep, there was supply somewhere, and we were able to chomp it up. And here it comes back for a retest. Okay. All right, so Foxo got it 15 second. Yes, I'm gonna hold that there. Okay, so now I'm gonna go to day trade 3 watch. So right now I'm watching CLRB and FOXO. Tesla, I usually watch Tesla. So I'm gonna keep this on, cause I'm trying to get out of the habit of doing a lot of penny stock watching and trading and stuff. I'm trying to do more so of the more significant or stable stocks, if you will. So I'm just going to add the bid and ask to Tesla. Bid and ask size. And then we'll get right over to the coding for a few minutes. Okay. Alright, so now that I have that, let's see what's on the radar screen. That's what I got going on over there. And okay. FOXO is, I think it gapped up way too much. Probably most of the day it's just going to continue to fill that gap. What do they call it? Gap and fill? Alright. S&P. Okay, so now I'm just going to come back and open up any little chart. Don't give me the memory. It's going to give me the memory error. I assure you. It does that. I don't know why it does that. But it's not the computer memory. The computer is fine. All right, so $10.09 TQQQ just put in a huge amount of, well, 108,000 share order at 10.09. Yep. So is this going to be support? We're going to have a little bounce off that, and then what do we have to the left of that? We drew that line right there. That is coinciding with this area here. So maybe that, maybe this. See that there? TQQQ has 108,000 shares there. So maybe that will hold and become support. However, there's a nice strong wick there. So probably all in this zone here would make sense. And it would be supported by that that resistance turn support there. So I'd say like all in here. All in here. All in here is your support zone. Yes, yes, maybe, yes. At least for a brief pullback. All right. See what happened. TQQQ. I should follow TQQQ. Like I said, punish the computer. All right, we're gonna save this. Save as day watch 4. We're gonna watch TQQQ as well. like I said, if it doesn't hold up, then it wasn't going to. Let's see, open. There was 3. Okay. So instead of this being Tesla, we'll make it TQQQ. Alright, and this is pretty much, I'll let this run, all 4 of these, I'll let them run all day. Hopefully we don't have any other TradeStation issues with disconnection, because if we do, then I'll lose all my valuable data. Okay, and radar screen, untitled. Okay, alright, so we want to make a breakout trade. So what's going on? Let's find something that is that it's the volume watch. I want to find something that is actually actively moving up, and we're going to apply the breakout strategy to it. I guess we don't have to, because what we really need to look at is something that has moved up. So say yesterday. Chart analysis. Alright, I'm going to add the basic, and we're going to add all of it. Where is my little radar screen? Eagle vision, true trading approach. Oh, this is what I'm looking for. Just want to get out of here. Okay. Radar screen. Back to the page 7. Palette. 1% gainers. Percent change. Net percent change. Let's go to palette. Okay. And let's check it on a 15-second time frame. Because like I said, in order for me to do these, create this algorithm for breakouts like I'm thinking about, it really needs to be on a smaller time frame. Could probably do a tick also, but let's do this. Alright, so we're just going to go ahead and get into it. And let's put this up here. Windows 11 is kind of cool. I mean, I've had Windows 10 for about 10 years now, and you know, with his new PC, it's running Windows 11. It's kind of cool. So let's see this one. All right. Oh, we need to change that too. What is that? What is that running across there? Wish to reward? No, because that is completely outdated. Updating the breakout script from 09005, which really it's making a new one. That's what we're doing. That's what we're making a new one. All right. So now come over here. This is gonna be on Pally. Finally getting to it. What, we're 10 minutes in this thing? 15 minutes in this thing? I gotta get set up, man. 30 minutes into it. Gotta get set up. What you talking about? Alright, so 15-second. Look at it, it's trying to move up back there. 15-second Pally 090623. Alright, and then we get all this good stuff. We know we're going to use swing highs because we're doing a breakout. So we're going to do something like, how are we going to qualify the swing highs? Well, how far are the swings? The swings are about 11 bars apart. So we're going to say, we're going to find that if there's a high with at least 11 bars, and we'll put looking back by 15. And then in order to keep the value of the high, because we need the high, and then the high, and then the high, and then when it breaks the high, then we're going to take the entry. So we're going to say that if the swing high is greater than 0, then value 2 equals swing H, else value 2 is the value of value 2 a bar ago. Okay, and then we're going to look for bullish bars. So if the close is greater than the open, for the simple fact that this thing is moving up. All right, what am I missing here? Equal sign is expected where? If swing high is greater than value 2, if swing high is greater than 0, then value 2 equals swing high, else value 2, then else value 2 equals, yeah, value 2 bar go. All right, so no errors there. We're going to come over here, and then we're going to add the show me, which is 15-second Pally. Oh, 906. Okay. All right, so all these bars. All right, but what we want to do is, so first, just so that you can see what's going on, we're going to plot 2 equals value 2, so you can see where those swing highs are. Plot 2 is value 2. Okay, go. So value 2 equals swing H, else value 2 equals value 2 and bar go. Yeah. Plot 2, value 2. Oh, does that need to be plot 3? Do we already have a plot 2? I'm feeling like something is wrong. Let's do this. Okay, that way I know my plots are working, so something must be wrong with my value 2. Oh, because we declare value 2 twice. So we said value 2 is something here, right? And then on the next line we said, nah, don't worry about that. Value 2 is actually equal to 0. So we have to take this away. All right, now when we verify, we get our highs, right? So, but that would have been tough, right? So if you had to took that breakout there at this level, then You would have took that breakout for it to break down. Ooh, spicy meatball. Um, no breakout happened to break this high here, so nothing would have happened here. But you would have got that one for some profit. You would have got that one if you had a stop loss low enough not to get stopped out. You would have caught it up here. Here you would have got, and that's why I don't like breakout trading. Because on the larger time frame, it wasn't responsive to these wicks. So I think what I need to do is make the breakouts from the, not the high, but the close. The high, the breakout of the close instead of the high. Because if you do it of the high, then you got all these wicks here that you keep getting stopped out on. Honestly, if you do it of the high, you're going to get in a little bit earlier. So, but you just have to take a smaller amount of profit. I mean, it's really a scalp trade. All right, so we're going to change that to close, and then that'll change. So it dropped everything down, right? So it made it look a little bit better, I guess, in terms of risk to reward. You still got to figure out where to put your risk at, though, right? So here you've got in there, boom. Here you got in there, boom. Here you got in there, a little bit of profit. Here you got a little bit of profit. So could work. Just needs to be a small, I'd say a small amount of, amount of profit. Risk to reward, whatever. Okay, so I mean that's honestly all I was looking for here. Like I said, just to make this on the smaller time frame. So yeah, I'm going to try this. I'm going to try just adding this right on over to a strategy. Strategy. 15-second. Pally. 090623. Okay, we're going to put all this right here. The risk is going to be, I don't know, optimization report is going to have to get busy. Going to have to get jiggy with it. We'll say 1.28, and then on the take profit we'll say, I'm looking at percentage here, 1.28, we'll say 4.62. So stop loss is 1.28%, and then take profit is 4.62. That's looking like a 1 to 3 risk to reward, which, would it be that good? I doubt it, but let's see. All right, so got that. We're going to say, again, for a strategy, we cannot plot anything. So no show me's, no plots. And so if all that is true, then we're going to buy the next bar at market. We're not going to buy the next bar at market. We're going to buy the next bar at the value of, well, hopefully it comes back and retests that swing high. Let's do that. We're going to buy it at that value too, which is the swing high level. So what I'm saying is, as it breaks here, you don't want to buy it on that close. You want to buy it when it comes back down and touches this breakout again, touches this level. I like that. So let's verify it. It didn't like that. This is what I was running into yesterday. I think it's going to be buy next bar at value to stop. Boom. All right, so looking so good so far. Let's come back over here. We're going to apply the strategy. So the 15-second that we just created, 15-second Pally 0906. Okay. And so we're going to get the NVOS out of here. We'll just remove it. And then properties for all. I don't think it's got to be a 201 because, well, maybe. Let's leave it. And then we're going to optimize that and optimize that, and then run the optimization report to see what it comes up with. No, it only bought one. It bought one here. Nah, that's not right. Where's the report at? Nah, that's not right. It's skipping all these. or did these not touch? So we can find that out by saying instead of buy next bar at value 2, we're just going to buy next bar at open. Okay, verify. Now look at that report again. Yeah, well, I guess you don't even have to look at the report. You see here that it still didn't take these trades. So what is going on? I know what's happening. I know what's happening. It's very interesting. In this trade station, all this stuff is very, very peculiar. You see here this line forming, and that's what I was talking about, the 201, this line forming. There's 201 bars on this chart, and now this is the 202nd bar, and then that's when these moving averages, that's when everything starts forming. So there's got to be at least 200 bars on the chart before those bars start forming. If we have the 200 moving average on the chart, it's got to wait 200 bars. It starts on the 201st. If you didn't have the 200 moving average on the chart and the indicator that you had on the chart, the longest it had to go back was a 50 moving average, then the indicator would start on the 51st. It's got to have 50 to create that indicator, so it start on the 51st. So if 200 moving average on the chart, that means that there's 200 bars on this chart. In order to get more bars on the chart so that our strategy and everything starts sooner, all we have to do is go here, instead of going 1 day back, because it's on the 15-second chart, just go 2 days back, and that'll at least get us 200 bars on the chart, and then our strategy will start sooner. But it only started here still, so we need to go back more, because we need this to at least reference the entire day. I know why I did it, because even on the prior day there were no bars. There was probably no volume. There's nothing going on here to give us 200 bars, which is crazy, which means that there's been absolutely no volume yesterday. So I probably need to go back like 30 days, because this is probably a chart that has just no trades going on. So what makes you think that this thing is going to shoot straight up if there's, no volume and everybody's just sitting on their hands waiting for it to go up? Everybody's selling, man. All right, so now that I went back 30 days, all right, so you see I went back at least 30 days, and there are some trades on the chart, 30 days back. Now we capture all this volume. We capture all these trades. But so now, instead of me being able to see what happens on just today from a breakout strategy standpoint, it goes back as far as 829. So I probably need to reel in that 30-day period just to be able to see better where it's at. But again, all these trades happen. All these breakout trades happen. I don't know what happened, and I can zoom in and see what's going on. Looks like a lot of stop losses there. Let's just print this. All right, so a lot of trades, a lot of losses, some wins. Like I said, if you were taking these breakout trades going back from August the whatever was the first trade, you'd be up $1,000, right? So is it worth it? I don't know. Well, and this is on a $50,000 account, so you'd be up $1,000. So is it worth it? Again, I don't know. What is that? That is a 2% return on your capital. 2% over 5 days of trading. That's not bad either. That's not bad either. But let's go to the optimization report and see exactly what it says, where you'd be wanting to take your make your stop and your risk at. So we're going to go here. We're going to go to customize. Those numbers that I put in there, we're just going to optimize it and see. Wait a minute. I think it already optimized it, so I need to probably need to put my initial numbers back in and see. Not looking good. All right, let's see what the report says now. Yeah, minus $4,000. That's what I say. I need to put my initial numbers back in, and they're here. So 1.28, and I think it was like 4.3. and we'll optimize from that level. Still looks very low. Minus 4,000. Minus 4,000? That's a low number. Minus 2,000. Yeah. But, and like I said, that's, I think breakout trading is just super risky. And it's risky for somebody who doesn't know how to do it. You know, that'd be me. That'd be me. Still on the 15-second chart. Why do these not looks? I would expect these to look way more wicky with it being on the 15-second chart. A lot more wicks. You out, hon? Oh, no, she's not out. Oh, she's in the other office. All right. Yeah. So. Profit. Let's look at the equity curve. All right, hang tight, folks. All right, I'm back. Okay, so again, like I said, this is a breakout trade. How can we improve? You know what? That's not right. That's not right. How do I know that's not right? Because it shouldn't have took all these trades. We're making a breakout trade, and these breakouts should have only happened right here when it crosses this yellow line. So something is happening to give us more entries than way more entries. I mean, like this. Is there another study? Is there another study that we got on here? Another strategy? Nope. Okay, so swing high. If all those conditions are true, then buy the next bar at open. It's something with these buy orders. I assure you. Then buy next bar at, because I think even before we changed the before the open part, we had buy the next bar at value 2. Yeah, well, I think that plays a role, but let's see. Value 2, stop. Okay, now it's what we're looking for. Because we bought it here, now we need to re-optimize it. Why was I trying to buy it at the open instead of value 2? I think we were getting faked out at value 2. It wasn't going all the way down. So there's a lot of stop losses going on there. Stop. 2 profit targets. All right, so let's see what the performance report says. Minus 6,000 still? All right, so I'm going to go back and put those initial values in, and we'll re-optimize from there. So 1.2 and 4.3. Because if you optimize and you don't include, your optimization has to, it only works within a certain range. The optimization report is not going to, it's not going to look from $1 risk all the way up to $2 billion risk and tell you what the best, the sweet spot is. It's only going to optimize within whatever range you tell it. So if the range that you tell it is way off from most efficient profit or the lowest risk, then it's going to give you what it gets. So I'm going to put in 1.28 because I think that's where I found was kind of like a reasonable area for risk to reward. And so the optimization happens. So my initial number for the take profit is 4.3, right? So the optimization, it just kind of puts in some initial figures, but so it's going to start at 2.3 and go as high as 6.93. And again, this is percent. So it's just the way that I have it in the strategy is percent. Still some low numbers. Good God Almighty, minus 6,000. What is going on? But is it only taking the trades in the areas? So it's still not. So it's still all these trades here. I'm thinking something's happening with this overnight deal, because this overnight deal is putting the swing high down here, and now it's buying every single candle above value 2, which it should not be doing. It should only be buying at value 2. So we've lost a lot of money through here, but it seems like through here it's cooperating. It's cooperating through here. It's not taking any trades because it's under value 2, and then when it gets here it cooperates. So we might need to change some of these conditions. Wait a minute. Identify what's going on with the swing highs here, with the swing lows and the swing highs. I identified where my swing high is, and here I said buy it at the next bar value 2, but I didn't qualify that the high needs to cross over that swing high. So let's go back to show me. I'm going to clean this up just a little bit while we look at it. We're going to turn this off. Okay. Alright, so we got all these greens down here. All these greens down here mean that, yeah, it's trying to take trades down there. So so that's my that's my fault. Yeah. So well, it's going to happen. It's going to happen. Alright, let's zoom back in and get some act right on this thing. Alright, so we gotta say for the show me, we gotta say that the high is over. Let's say crosses over, and that's the thing about easy language with TradeStation. Some of the other platforms and some of the other coding languages do it as well. They make normal words already a part of a function that you can just type it in and it'll put in what you want. So I mean, it's technically a function. All right, so and I can show you by definition of over is this, right? So it's already kind of hard coded. All right, so high crosses over value 2. Bing, bam, boom. Okay. All right, so now instead of all those green dots down there, we get the green dot here because it crosses over value 2. We get the green dot here because it crosses over that yellow. Boom, 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 boom. That's what we needed. All right, so we're going to just take this, retype it, psych, copy and paste, because I'm lazy. Now we're going to re-verify that. Wait a minute, you can't find the string. What are you talking about? Okay, there we go. All right, so now we're going to go back and we're going to say edit studies. We're going to turn on this breakout trade again. Now we only get those few. There we go. There we go. And we don't get those. All right, all right. See, this dumb computer. I mean, dumb me. Whatever. Okay. All right, so let's go back to edit studies, and we're gonna customize. We'll re-optimize, and still looks like it's negative, but it's like a negative 1,000. It's not negative 60,000. Why is it not? That's the best it could come up with? So I do want to make sure that it's not capturing trades earlier in the chart, because that's not, yeah, well, it did. One there, several through here, and this liquidity is not high enough for me to consider even taking trades through here. So and it's actually trying to optimize the entire spectrum also based on this information. So again, liquidity is too low. So I'm going to say this volume is, what is this volume? 5,900, 4,000, 10,000, 9,000. Let's do this. Let's get a little bit creative here. So we're going to change this to the 5-minute time frame, and we're going to say, because now we're going to look at the volume. Volume is like 0, 0, 0, nothing, nothing, nothing. 8,000, 7,000, 8,000, 8, 8, 10, 11. So it's nothing. All right. So we're going to say that on the 5-minute time frame, the volume has got to be above. Now we're at like 200,000. So we're going to say on the 5-minute time frame, the volume's got to be over like 50,000, and then that'll get rid of all those other transactions. All right, so now in order to do that, we got to go back to the 15-second time frame, and then we need to right click and add data. So we're going to add another time frame, another data stream to this chart. So we're adding another time frame. So add symbol. It's going to be the same one, PALI, and we're going to prompt for editing, because we're going to change it to the 5-minute time frame. So now we can assess 2 time frames on the same chart, and to put that time frame down here, that's fine. But what we're going to do is we're going to go back here to our strategy, and we're going to say so one of the conditions also has to be if volume of data 2 is greater than, no, it can't be an if. It just have to be volume of data 2, and data 2 is the 5-minute time frame. If volume of data 2 is greater than 50 whopping thousand. Okay, now we're going to verify that. Okay, and I know that you can't do multiple data streams with algorithmic trading with strategies when you're on the tick time frame, and that's okay. But we're going to go back to edit studies, strategies, and now, good friends, now we optimize. And now we optimize. Optimize Prime. Optimize Prime. Optimize Prime. Optimize Prime. Was that the Transformer? Optimize Prime? Was it? Nah, I don't think so. Okay, so we ran that optimization, but we didn't turn this. Yeah, we turned it on. Okay, well, did we have any orders? I don't see any orders there. No orders. What have we got here? See, now is when I'd go through and I'd use the print report feature to find out exactly what these values are, but I keep finding that when I do the print report feature, it just keeps moving according to the what's going on with the chart, and I can't get it to sit still. Okay. Let's edit symbol and make sure that we've gone back enough days. It looks like we've gone back enough days because we have our indicators already showing up there. So the 15-second time frame for the one, 5-minute time frame for the other. Tell you what, I've got to do this, copy it, and go over here to the show me and just make sure that it's computing correctly. Okay, because once again, well, tell you what, just for apples, what we had here before was a 30-day chart. So let's go back and add that to the 30-day chart. Now we have 15-second time frame is data 1, data 2 is a 5-minute time frame. We're going to close that. And so again, some of these show me's did pop up for, you see it popped up here. It popped up for these other days. Okay, so it should not pop up for these other days. So this green dot here, that green dot should go away, right? Once we come back over here and we update this this strategy, this show me. So update it, and it went away. So it did what it was supposed to. Now let's come back over here to the day we're on, and it is here. So it's doing what it's supposed to do, but it's not seeming to work on the strategy. And maybe you can't use multiple data streams on the strategies. I know I've read some various things about data streams and strategies, but I don't recall if you can't use multiple data streams on strategy. I know you can't do it with ticks, but maybe you can't do it with strategies either. That's going to be something that I have to look up, and I don't know that I can do that quick enough right now. And I'm trying to think if I aggregate, I could I mean, just for the mere fact of finding if this breakout strategy works on this day, I could just say, hey, all right, let's see what the volume is on these candles. The volume on these candles, 12,000, 30,000, 223, 68, 83, 25, 20, 20, 20, 20, 20, 20, 75, 20. All right, so I could probably just easily say, all right, well, if the volume has got to be over 20,000. Just on this time frame, the volume has got to be over 20,000. And that way we wouldn't have to address multiple data streams, and we could see what's going on now. So we're going to do that, and I'll have to come back and sort out this other mess later. All right, so now we're going to just go to optimize one more time, as if we hadn't been here like 40 times already. What are you doing, Stumies? We're always doing this optimization thing. You think it's going good? Yeah, now we at 3,000. There we go. There we go. Now we got something. Now we working with something. Yeah. All right. Okay, so we got it. We got it. So the breakout strategy worked. It's effective. Let's pull up this report. All right, so we made $3,000. We profited $4,000. We lost $1,300. We grossed $3,000. And this is on how many trades? Like 4 trades? 6 trades. 6 trades with a 66% profitability and a 3.3 profit factor. I think it's good. Yeah, I like it. As my younger brother would say, if you like it, I love it. But I'm just going to let this run for a bit and see if it gives, well, the take this to another screen. It doesn't have a swing high to break over right now because it's already over it. So it'd have to wait until it makes another swing high, comes down, and then starts to break back over it before it'll be ready to take another trade. So I can just let that run, let you guys check it out while I look on a website and see if I can find out why or how multiple data streams don't work, because I should have been able to use the data stream of the 5-minute time frame to overlay over top of this data stream for the 15-second time frame and look at the volume. All right, if you have any questions in the chat out there, chat to me. I chat back. It's the whole, you know, I kind of have fun. I do this anyway. I sit here all day on the charts. You know, everybody knows that trading is kind of a lonely thing, and that's cool. But I do this anyway, sitting here all day working on charts, making scripts, looking over charts. So just from, and I like to talk, so I can talk to myself, so I can talk to a monitor. But it's nice to talk to other people too. So yeah, I mean, I'll be here. If you're not, that's fine. I'll be here. But chat to me. All right. I'm gonna open back up while that's going and potentially setting up again. I'm gonna go over here. Oh, let's see what the equity curve look like. Well, with only 6 trades, I mean, it's not going to be anything terribly bizarre. It should be moving up. All right, the performance graph, yeah, so that looks good. All right, ooh, now that's a breakout of a breakout. Oh, it's trying to. It's going to create another. It's going to create another swing high here. All right, Pally. Now, obviously, Pally is, woo, good Lord, good night. Did that go into a halt? Let's see, that went from like 66 to, that went up 10 cents. 10 cents on 70, 17. Nah, not quite. Okay. But it came up, and it came up with nice volume. Where's my volume watcher on here? I don't think I'm watching Pally, but it's certainly moving. Where's my perch at? Here we go. That thing is moving. Do I have Pally? Am I watching Pally? Yeah, watching Pally. Okay, at 10:41 we got a order for 40,000 shares at 10:41. Where's 10:41? 10:41. Right in here. Okay. All right. But I'm not watching it. Oh no! I think that one is the one that I think that's around the time when my data started acting funny. And it might just be on this one chart. This one desktop. Yeah, my 3-day watch is not acting right. But Pally is still working, so yeah, so at around 10:40 we got a lot of orders there. So that was the beginning of the move. Let's see. I wish I had more information. Oh, I did have Pally running in the background. So let's see what happened at 1040 and after 1040. 1040, we got those large orders right in there, right? Okay, and then just as I told you on other videos, yes, my strategy is starting to work. I'm really starting to understand and learn what I want to see in a setup. I want to see this high volume here, and then I want to see down here that we actually have more ask on the board. You see we have these, no, not you. You see that we have these, the red line is over the blue line most of the time. That means that there's a higher amount of ask in. So a large buyer came, they did their thing, they're supporting the market, and now for whatever reason there's still a high amount of ask there, and they know why. I don't know why. They know why. But whether it's time, whether it's coming toward lunchtime, whether it's people have just been in the market too long, whatever reason, there's a high amount of ask. People are wanting to sell. And so, and maybe it's because if you look at the larger layout, maybe it's because it's broken. I don't know. Maybe it's just doesn't seem to be supporting, showing support. But either way, there's a high amount of ask, so there's plenty of people willing to sell. So there is seller liquidity. There's available shares to buy, and so the big money, they can continue to go ahead and buy these shares up that people are willing to sell. Huge spike in sales there. Or maybe there's people willing to short it. Maybe this is the shorting range. I don't know. Let me put myself a note. Either way, there's the availability there. And so what happens? The buyers buy that up. And they didn't see that going on. But guess what? I saw it. I saw it. Because I've got the volume watch deal up, right? I've got the volume watch. Where am I at? Where's Pally? Where's Pally? Pally's right here. 39,000 shares. Everything else that's been trading Pally has been fairly small. 39,000 shares is a huge deal. That's a big boy. Who else is throwing big numbers on this? Oh, FOXO at 1058. 202,000 shares. Let's see what's going on with FOXO. But I don't want to lose this Pally screen because yeah, because that's moving nicely. Alright, so we're gonna save workspace as, we're gonna do Pally, and then we're gonna open, we just open Pally, and then we'll just rename it Open Pally, and we're gonna open it with as FOXO. I want to see what's going on with FOXO at around 1058. Now it should have opened as Pally / copy, but it's not. Alright, tell you what, we're gonna open, I think it was Tesla Monitor, which is the same thing. It's like the template for me. FOXO. at 1058. Oh, that might be a support. But it's still got, excuse me, it's still got a long ways to go. So 1058 is right around in here. So there's a huge order in here. We see that was that 200,000 share order right here. So that might be seller absorption. So absorbing all the shares that sellers have put in. And so now we need to see this thing just kind of trickle right in here. And then we want to see that high availability of ask. And there we got to see a break above that ask line. Yep. So this is the point to watch FOXO above this line. Excuse me. Sorry for chewing on this. These Skittles are good. You hear me? This is not a commercial for Skittles, but they're good. Love them. Okay, so I pretty much turned on the volume watch right around 9:35, 9:40, something like that. So all these shares in here have been relatively lower than that super huge 200,000 share order. So it is significant. NXGN has had and it was at ask, so it was on the higher side of the market. NXGN having a, I mean, it's not a cheap stock, right? At $23, but around 1020, 1040, 1027, 1053, 1058. I mean, huge amounts of orders. 150,000, 200,000, 100,000, 200,000, 200,000. That's a lot of orders for a $20 stock. So who is working this? Wow. What's going on here? Man. Good gracious. Is that a spectacular gap up or what? Oh. Wow. Yes, yes, yes. What is NextGen got going on, man? I mean, it broke above this. It broke above this descending resistance here and just shot up. Maybe too high? Too much volume already? And it'll retrace a bit. How much? I don't know. And then, I mean, but that's amazing. Okay, but on the grand scheme of things, and this is why you look at your top-down analysis. Top-down, start here, boom, 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 and boom. You don't know where that last one's going to, so don't pretend like you do. But, I mean, it's pretty much right here, right? I mean, you could fudge this line. Of course, all lines are fudgeable. You could fudge it right there. And you could say that, okay, well, it gapped up, but that's about all the meat on the bone. And I wouldn't take any trade on it. I'd short it. I wouldn't take any trade on it until it, gets over and bounces for a come up. I don't know what the answer is. I really don't know what the answer is. But I don't think that it's smart to get in long right now after it's already made that move, and like most of that was pre-market. Was that pre-market? I thought it looked like that was pre-market. That was that yesterday? This mess is making me dizzy. That looks like that went up in the pre-market hours. It is 9.6. That looks like that was a pre-market huge gap up. So no one. Folks weren't really a part of that move. Now, I thought, okay, that's why it's confusing me, because I typically have after hours turned off. So this is after hours. This is pre-market. You see down there at the bottom, 8 o'clock or so. So this moved up in pre-market hours. So yeah, so the general market, the people who also have money, who are awake now, they were not a part of this move up. I don't know who decided that this move up was reasonable or that made sense. So somebody did, but other people have to then test that. Other people have to qualify that. And there's not a lot of volume there. 65,000, 1,000, 6,900. There's not a lot of volume there. So it moved up a lot, yes. Would you take this trade? Yeah, I wouldn't. Knowing what I know now, right? So in previous times, I might be like, oh yeah, this is good. Let's take this. Look how far high it went up. But with the low volume, especially, I wouldn't take this trade. And also, even if it had more volume, I'd be more enticed to take it. But I still don't think it'd be smart to do a whole lot with it, even if it had more volume. If it had more volume, you could capture the liquidity changes. But with the low volume like that, and already knowing that it's kind of in a weak position, and no liquidity, couldn't get out if you wanted to, nah, not me, not your boy, no sir, no sir. Okay, I'm just kind of hanging out now. I mean, I don't really have anything else to do with these charts. I think I was interested in Pally and making those breakout trades. Let's see, did it call for any more breakouts? These stops here. I don't know why this one is registering, because that's not a crossover. Or maybe it did. The high, it started here, it opened. So if you look at just the logic of my strategy, technically this bar opened here, it crossed over, but then it closed below. So I think it's indicating on that next bar that it's a potential entry because it crossed over, but it didn't stay over. So it looks like the strategy did not enter on that one, which is good, because it would have been a bad one to do. So probably in the future, just looking at that and seeing and knowing, understanding how wicks work, you probably want to say that the bar prior is less than this break line, or significantly lower, or maybe the high of the bar is below the break line, or something like that, something to give you some type of assurance that you're not you're not entering for a swing high break from above the swing high. And actually, I'm curious though. I would have thought that it would have taken this break, because this is a break. It should have took this break. Do I need to reapply the strategy? You know what? I think I was going to say, because it was optimized, it might have changed the entry, but it shouldn't have changed the entry. So it closes over the open. Oh, it's got to be a bullish candle. We said here that the candle has to be a bearish candle. We said that there's got to be a bearish candle. So I don't know. Should I change that? What are your thoughts? For a breakout trade, should I say that this criteria to be met, that the candle needs to be a bullish candle instead of a bearish candle? What do you think? What do you think out there in TV land? I think for kicks and giggles, I'm just going to I'm going to take this criteria out altogether. So it's going to be a bullish candle or a bearish candle. I'm going to take this out altogether and then just see what it does. If we re-verify, oh, maybe it's the volume? For some reason it's not firing off on this one here, and it should, because it's identifying that that's a swing high, and we're going to say that the high crosses over that value, unless it gapped over right there. I would, because I think it would have to cross over, and if it gaps over, then that wouldn't. High. Yeah, I think it gapped over. So it closed right here and it opened above it. So I think with that little gap there, it didn't take that one. Okay, well, yeah. Nothing I'm going to do about that right now, but I'll see if our equity curve changed with just taking off the it being a bearish candle. And it doesn't look like it changed. Looks like we still have the same entries. Yeah. Okay. So I mean, yeah, I'm good with that. I'm good with that. All right, guys. Appreciate you for rocking with me today. We made a breakout strategy. We made a breakout strategy, and I like it. So, yep. I'm going to go off and do a few other things, and then I'll come back and do some other important things later. Okay, so I did get it verified here, and after verifying it and then reapplying it, it changed that profitability. Let's see, performance graph, it changed it. So I do need to leave it as what, a bearish candle? I thought it would update on its own. Close is greater than the open? Yeah, well, that's what bear means. No. Okay, so I had a bullish candle. All right, well, truer. Jesus. Okay, so what if we only do bear candles? Which doesn't make sense because it's a break out over. Okay, so yeah, so close is greater than open. Good deal. All right, so $3,000, 6% gain, 3.3% profit factor. Was that 6%? Yeah, 6% gain. I like it. I like it. I like it. All right, guys, I'm out of here. I'm Eric. Peace.